Hi, so this is a series called What Matters, where I discuss the key takeaways, thoughts, questions, essentially questions, and preponderances on the latest developments that happen all around us in any arena: political, entertainment, life, lifestyle, travel, reading books, etc. Well, with that, the important thing is that it's questions, that it's thoughts that we take away from this rather than opinions. Opinions are old, opinions are passe. I think we've all overdone it, abused, used, spewed, chewed, spitted. It's all been done. I think opinions are done. They're useless. They don't make any value add. And I think questions will, with the new trend, questions will be important always, because questions will lead us to thinking. That thinking would lead us to introspection, finding answers, skill of using rationality and all that, and getting to the actual answers. Yes, suitable to individuals differently, but that's the important part, through questions and probing, not opinions, and not trying to persuade the other. I mean, that's the key. I mean, it's just a waste of time trying to persuade the other. In fact, to that, I'll refer to something, thought experiment I thought of towards the end, and I'm still thinking around it. It's still a kind of a question in my mind, so I'm not sure how you know it would be received or not. Well, to begin with, to set the things moving, this hearing that happened, Senate hearing yesterday, Housing, Urban Development, Banking, Housing, and Urban Affairs Committee, chaired by Sherrod Brown, and who's a Democrat senator from Ohio, and then Tim Scott, the Republican senator from South Carolina. Very, very divisive, very political, very scathing opening remarks by Sherrod Brown, and then very scathing defensive remarks by, or criticizing remarks by Tim Scott, and so on, and even the other participants. My question, first question is, and by the way, I'll refer to all the details as well. All right, let's begin with that. Firstly, let's set the background. There were 8 CEOs of the top banks in America who were there appearing for the hearing: Wells Fargo, BofA, Bank of America, JP Morgan, Citi, State Street, BNY Mellon, Goldman Sachs, and Morgan Stanley. All 8 CEOs were there. Let's not even go into diversity, but then. Uh, there's a lot of acknowledgement in the two statements by Tim Scott and Sherwood Brown, and that's something important. And it's, again, I'm saying, uh, I'll cover those statements and then I'll refer to why this is all very important for us to think as questions rather than opinions. So there is an acknowledgement of the fact that there is $15 trillion in assets, $80 trillion in client assets, half of the nation's deposits. The banks touch almost every aspect of the life, not just financial, but the whole of economy, all Americans, and the world, globe. Your mistakes and distress and failure don't just affect you, your banks, your paychecks, but the whole world. That's amazing coming from a politician. Why it's coming so late, I don't know. In fact, that's one of the questions we'll think about. Why now? The risks you take, the mistakes you make affect everyone. Classic example recently, 2008, in fresh in our memories. Enormous power, enormous responsibility. I think that statement is incomplete, because then you need to talk about enormous accountability as well. And that's why they're bringing in two things, which are the essential two key takeaways for me from yesterday's hearing, is that one is RECOUP Act and one is increasing capital requirements. That's just the whole shebang around, the whole shenanigan around this whole hearing is about those two things. We need stronger capital requirements. We need common sense rules to prevent or withstand losses from the riskiest financial shenanigans. I'm going to rush through this statement because you can read through it. It's a beautiful, thrilling statement from both sides, by the way, right? Don't get me wrong on that. Sometimes what happens is one sort of power is calling out the other sort of power, and you know who the beneficiary is? Common people, because you know sometimes you were able to watch the slinging contest throws out a lot of things in the open, and we are all witness to that, so that we can make our own minds. That's what this was, openly calling out that anyone having any doubt about whether Wall Street could be trusted to use its power responsibly need only look at the current lobbying fight which is on regarding this. Wow. We all knew there was lobbying happening, but then a politician coming and acknowledging that this openly is amazing. You're saying that cracking down on Wall Street is going to hurt working families? You're going to claim that? Really? That's sort of a rhetorical question that never gets asked out in the public. Economic devastation in 2008 is the one that hurts working families, where Wall Street executives and Wall Street people make all of the money. All right, that's what he's saying. Your game is to try to confuse people. Most Americans probably think that the money is stashed away in a vault, which is not the case. Well, it doesn't make your banks as much money as the risky stuff by just lending to small businesses. So you take risk a lot more than you just help people or the first home buyers and the diversity and the racial equity and all that. You don't do that. That's what he's saying. You would rather you would rather fund risky trading and derivative bets than boring bread and butter small business lending. There you go. Even with this rule, you can still lend to small businesses and homeowners. You might just not increase your profits quarter after quarter. Those fat paychecks and executive travel, first class, and all that. Well, we know the banking industry isn't giving up without a well-funded fight. That's the politician saying that, all right? Mind you, Wall Street pours money to high-priced lobbies. And by the way, not that Democrats don't get that. It's one of the questions we'll pose. Into high-priced lobbies to fight any effort to put down the most basic guardrails on your ability to do whatever you want. Wall Street pours money into high-priced lobbyists to fight any effort to put the most basic guardrails on your ability to do whatever you want. This statement alone should be underlined and repeated to the politicians whenever, and this side of that, I am again, whenever they're asking for your vote. What about this now? You're aware of this. You're aware that the Wall Street pours money on this thing, and you are the one who receives the money, political donations. So what are we doing about this, all right? What your banks want is to maximize quarterly profits and so on. All right, they're just making the evil out of banks. Well, okay. Working people paid the price. This is why the people hate Wall Street and Washington because lobbying campaigns actually work. Wow, that you just conceded in the same document that lobbying actually works. So not too sure how bold and courageous was that now. Working class Americans are tired of arrogant executives gambling with the people's money, riding off into the sunset without any consequences. Ooh. We need to pass the bipartisan RECOUP Act to hold failed bank executives accountable for driving their banks into the ground. Strong capital rules. All right. Uh, After those recent failures, we are reminded of how fragile the banking system could be. As a result, your banks are only getting more powerful because they recently bought those banks over, the failed banks. There have been cosmetic changes in increasing the wages, overdraft fees reduction, but not real changes because the prices have still not been reduced for consumers. Diversity is still not there on the board, and the workers' efforts to unionize are being curbed. We all know that. Final thing is put Wall Street to work for Main Street. Well, there's a question mark at the end of it, and the document for himself is questioning that it's going to happen or not. Anyways, it's more uh, rhetorical than anything that it poses a question to. All right. So any statement that is made here, there is a counter argument in the Tim Scott statement. So I'm not just going to waste time between the two because this is not a partisan thing. All I'm interested in the few questions that as common people we all need to ask, be it American, be it non-American, because the whole global economy is affected by dollar and the whole dollar financial system. All right. Now, I've got a lot of questions around this and I've written them down because there were just so many questions in my mind. And one thought experiment. Again, it's just a thought. It's just a question in my mind. It's just a preponderance, the initial reaction which come to mind when you read something as something like this. And I'm very interested most of the time in the press releases and in what the people are saying in the actual official press releases. You have time to read, underline the words, sit back, question. What happens in an interview on the whole of this uh, staged interviews and even some of the podcasts, not all podcasts are good, is the fact that there is so much happening, there's so much content going that you are just a dumb witness to it. You're a spectator. You're not thinking. You're not getting time to think. That happens on a written word. That happens on when you're sitting by yourself and thinking about things, uninfluenced by what people are saying around you, uninfluenced by the noise, by the chatter, by the opinions. Again, opinions. Let's right away get into the questions I've been referring to. All right, why such scathing statements now? What's brewing? Is there more that has happened after the SVB and the other banks that have failed in Silicon Valley and around that has spooked these guys, that has suddenly come to their knowledge and they're like, we got to do something? Because such open criticism and direct attack on the executives, top executives, all right, they're very powerful people. In fact, he says, you are the eight of the most powerful people in the country. He acknowledges that in his opening statement, all right, on the first page itself. Go and refer to it, please. Make sure you read this document, please, for God's sake, read this document. These are essential documents. I mean, as much time you waste on reading or watching some channel spewing some news to you, this is better off. So openly criticizing and shackling the funding source at Wall Street, because these are the executives who are going to make decisions of political donations, lobbying donations, funds at their disposal, and they're going to make the decisions, and you're challenging them. There's got to be more to it than meets the eye. There's always more to it than meets the eye, but in this case in particular, there's got to be something in the context and the backdrop of the election year that's coming in and running. There's something. First, what is it? Why now? What's brewing? These questions we need to think. Now, coming to capital requirements and RECOUP Act one by one, let's begin with the capital requirements. What is this capital requirement? Capital requirement is a simple concept that I understand is the fact that you give the bank $100 and such and 100 other or 1,000 other people would give $100 each to the bank to keep it safely. Now, not all of us going to need that, let's say $100 or even $20 the next day or the next month. So we keep it over there. The banks know this. It now comes into the domain of probability and statistical modeling as to how many people would require, how many people would require, and how much would they require. I'm not sure if I'm able to catch the volume. How much would they require, let's say, on a given day? And that's how the capital requirement is established. There are experts who study all this, and there are experts who are spending their whole careers to trying to understand and model, come up with statistical, mathematical, analytical models to set this in place. All right. Now, my questions that just pop in my mind right after reading all this, especially right after reading the counter arguments, are: is it safe? Does it make any safer to have higher capital requirements? If not, then if it is not, then it is not. I mean, then 100% waiver would be fine. Why have capital requirements any which way? Because then the argument that it's going to only make banking costly and then reduce funds available for a common person, for the new entrepreneur, new home buyer, and all that. That's true then. Then 100% waiver would be the best interest, because even let's say there's a 20% capital requirement, that 20% is just blocked for no value. Then you can use it for people and go on and then let banks take more risks. But that's not the case, because there will be some people on a daily basis who need cash, who need to withdraw funds. And if that's the case, well, that answers it in a way that no, you cannot not have capital requirements. You need capital requirement, because you and I one day might just go for, let's say, 20% of our money to be withdrawn for some transaction. One, so we do need capital requirements. All right. If there is, so the whole opposition on the no need for increase in capital requirement we'll come to, but the fact that capital requirement is required, it's not an evil thing, is established more or less, I guess. Now the thing is, how much? And you know, maybe I just end up using this, it just pops this whole sparkling. Anyway, now if that's the case, then how much, right? Oh, by the way, one more thing in favor of capital requirements or otherwise. The banks which are opposing the fact that there is an increase in the capital requirement and this should not happen and all that, it would increase the banking cost for the people and all that. All right. Now let's look at from the other side. Aren't we required by the banks to meet certain requirements, minimum deposit or minimum monthly balance maintenance or quarterly balance maintenance? Why is that? Minimum number of or the maximum number of transactions you can do in a month, or minimum credit card or minimum credit rating for loans or mortgages? Why? Minimum, let me see, I'd written all of these. You need to have a minimum down payment for mortgages. Why? Good one. Why do we need minimum down payment for mortgages? Well, that's essentially the same concept of capital requirement, because they want your skin in the game. They want your and my skin in the game. So 20%, 10% capital down payment requirement when we ask for a mortgage. Same thing, buddy. You as a bank better keep 10% of my money that I lend you. I can ask for it anytime. I'm not asking for 100%. I understand you're going to take risk and make money, and then that's how you provide me all the services. Very well understood. But then have that money set aside, just like you ask us first. Now, how much, right? The question is Basel 2 versus Basel 3. Now, this thing comes into picture. Basel. What is Basel? Basel is a committee, banking committee on Basel Committee on Banking Supervision, Switzerland, amazing place, sitting in the ivory towers. Some highfalutin experts would decide on the banking requirements. Here is my thing. Either we should not have had it in the first place, but then now that is there because the banking has become so complex. The West decided that they need to have it, and then they ended up having it, and US is party to it. Well, now are we saying that these politicians are experts, more expert, and have higher expertise than those banking experts? Unlikely, right? So any for or against debate is useless. Why is this made to be political is something we need to look at very seriously, because somehow they're so hungry and greedy for the vote that they can divide the whole demographics on the most bizarre of the things. I'll give you an example, and I'll give you a reason why this is bizarre. This should not be political. Capital requirement is based on the risk weighted assessment of how much you have and how much would you need and all that. This is based on pure mathematics, statistics, analysis, modeling, which would give you quantitative results. It's not in the realm of political discussions. It's mathematical. Those guys sitting over there in the banking committees, they're deciding this. They've figured out that this is how much capital would be required depending on the risks. And in fact, politicians have a bias in overlooking political risks. So those banking committee people would in fact include and assess political risks as well, country risk, currency risk, and that's how they come up with the capital requirement. Unless we're saying those guys are dumb and idiots and have wasted their career studying this for the whole lives, economics, statistics, and these guys, politicians, have probably taken a single course in one of their terms, and they have better understanding. If we've come to that, then yes, then it's a different debate altogether. Why do my mind does not allow me to even believe that rationally thinking? So for or against, the whole debate is useless. Basel has recommended a capital requirement threshold. Well, they are the experts. You should rely on the experts. Fine. Now, in fact, if you have a question, then you should change the experts. If you feel that they're not doing their jobs properly, you should get it validated by the experts in the country or outside the committee, and then sort of have a monitoring mechanism. But you cannot make this political only. Now, if that's something that we kind of see, the questions that are posed is this political? Is this quantitative? And if so, then are we going to rely more on those experts and just believe by that? And then whichever side is aligning their idea towards that law, towards the group of that expert and what their recommendation is, that makes sense. Simple. Now, the counter argument was that this would increase the costs and everything, but on for banking, and that would trickle down to the bottom layer, small businesses, first-time home buyers, and so on and so forth. Well, here is the question then: why not? Why would that happen? Why would the cost increase? The cost would increase the because if the total revenue that is generated has to be divided, and there is an expense. Now, what we are doing is we are keeping the profit at a certain level. We want 10% profit before the capital requirements, and we want it after the capital requirement. But that is what is flawed. The flaw is not the cost is increasing. The flaw is that you want to make that certain percentage of revenue and return on your capital. You're not willing to compromise that. You're not willing to walk the bridge halfway. Because of which, yes, obviously, if you're not going to invest, let's say 10% of your capital now, that's going to earn lesser of those risky return profits. But that's also going to make your banking safer, which would mean that you could have higher value customers who could use your capital more beneficially. Because there'll be if you're not taking those risks, let's say risky assets for those 10% extra, you're not going to lend it to 10% of the, let's say, even from them there is a 10% delinquent card users. You're not going to lend to them because you're going to be very particular about every penny that you would have, right? So the focus on the money that is there that could be lent increases when you don't increase, when you don't allow extra capital. So 20, and let's say 20% is a capital requirement, so you can lend 80%, right? Now, if you increase from 80% to 90%, so there is more capital. You're a little careless. You're a little casual about it. But when it is 80, you're more careful. When it is 70, you're even more careful. That I got to get more return for my money on 70, so I cannot lend it to risky assets. I cannot lend it to a risky credit card portfolio. I cannot lend it to somebody who's not ready for running a new business or a new home buyer, or you're not lending it recklessly. You're not, or you're going to do extra due diligence, right? You're going to be like, okay, I'll have to lend it and I need a 10% return on this. So I better be very, very sure that this guy would give me a good return on my money or at least pay me back. It increases the efficiency in the banking, not creates more cost overall, because you'll not need recovery people. You'll not need, or you'll not have to face NPAs. You'll not have to face non-performing assets. You'll not have to face ballooning credit card defaults. That's cost. That's cost to the companies. Then you'll have to write it off. When you write it off, your company rating gets affected by Moody's and all other things. Your stock gets affected when you have higher NPAs. So please, this whole debate of cost will be increased is just to confuse people. It doesn't make sense. That's the first few things that I've made, come in as a reaction, come in as a response, come in as preponderances. It doesn't add up. Uh, okay, now the RECOUP Act. So, okay, RECOUP Act. Let's see. RECOUP Act is increasing the regulation and control and accountability on the top executives, board of directors, and so on and so forth. Because the contention has been that, let's say, the bank that failed in Silicon Valley Bank, now the executives and the top honchos can just simply walk away without much accountability, and they can still have their packages intact, their pay, their remunerations, incentive, bonus-based, incentive-based, stock-based, the profit they make by selling the stocks, everything is intact. It only makes sense, and circle back to it. Aren't laws applicable to common people? Can you default on your credit card today, run it down in the ground, and just walk away? No, you cannot. Can you default on a credit card and then, because you're a shopaholic, let's say, and you just love shopping, can you just keep shopping and just keep increasing your credit card debt? No. Can you then just let one card have whatever debt it has and then just go on and have another card? Would they give it to you? No. Then how come one or top executives can run a bank into the ground, or an institution or a company, whatever it is, lose value for all the shareholders, lose value for the people, the jobs and everything, and then yet they can go on and lead another bank, another institution, another company? Doesn't add up. And if that's the case, it makes sense there is an accountability. Also, because when you go higher up, you are signing up. You're not literally doing any work. You're being paid so good for your decision making abilities. You're not like manually working. You get all the luxuries, you get all the benefits, executive pay, perks, travel, everything. The only thing you're supposed to do is run it well. There needs to be an accountability, because with higher power, you are responsible to more people. You've signed it up. Don't do it otherwise. You have more responsibility with more power. And one more thing, which is accountability. You need to be accountable to the whole set of people within the company and outside. And that's the case. That's what the RECOUP Act is about. It's about clawback. It's about clawback of money even 24 months prior to the failure of the company or the bank. Makes sense? So there will be some skin in the game, as we talked about in the mortgage down payment. There is some skin in the game. Makes sense. Now, question is of overreach. Why not? Why? I mean, on the other side of the aisle, overreach. Yes, there is always an overreach. I mean, it would have been an amazing world without regulations, and we all could have self-regulated and self-governed, an amazing, ideal utopia where nobody has to answer to no one else, no government, no law, nothing. But that's not the case. Now, the question comes is how much regulation is overreach and how much regulation is overregulation. That's always subjective. Then that brings in the whole that brings in the whole question as to where do we start, right? In fact, in this scenario, I would say the person who's getting remunerated $15 million better be more regulated than a person who's earning $15 an hour. It's only fair in terms of larger life. He's getting some benefits with the $15 an hour person is slogging their ass off and still not making. Why is that person more regulated? Can that person default on their mortgage payment? Can that person default on their credit card payment? No. Not even a single credit card payment can be defaulted without repercussions. Then why is that person going to go scot free with the whole pay package? They can even play around with their stocks. Doesn't add up. It does not add up. Nothing makes sense that would be in favor of not regulating the companies. In fact, the more the person or there is accountability of the top executive, the more serious they would be taking their jobs and be very particular about driving dividends, driving bonuses within the company that would percolate down to the bottom of the pyramid. Well, looks like the case. They will have the skin in the game. They will know that 24 months. If this company goes down even after 24 months after I leave with all the crap that I've brewed in this company, I'm going to still be accountable for all of it. It's only it's only making sense that this should happen from the common people's perspective, which is the largest demographic chunk that we all are. It makes a lot of sense in the interest. There's nothing to be politically divided about on this. It's not even applicable to us. It's happening somewhere in the top of the ivory tower. Those guys are fighting between the two powers. One power is government and one power is money. Let them bloody fight it out. The only thing that is in interest is whosoever is for more regulation on the top people. It only makes it fair and equitable between us, the bottom layer, and the top layer. So be it. I think it's only fair. Because it's not fair that they can take a risky lifestyle, but a person who loves shopping cannot on a credit card. Why would that person not be allowed to have a risky lifestyle? Well, they should be allowed to have a risky lifestyle. Let them, on a 10,000 credit limit, let them buy 15,000 credit, and then, well, too bad if they cannot pay. Let them go to another credit card company and get another credit card and blow it up as well. That's only fair then. They should have a mortgage of $1 million house and then they're not able to pay. All right, I'm not able to pay, so what do I do? That should be the approach then for the people. No, it's not. People toe the line or the bottom layer, but at the top layer, it always somehow is above the cloud and hidden, and then everything is fine. I think it's a fair act and again, somebody would be like, oh, you don't understand the nuances. Well, that's the common people. Common people are the common, right? We don't have the luxury of Ivy education because that's been taken away from us. That's so far out from us that we cannot be educated. Is that our fault? I don't know. Is that somebody else's fault? Well, yes, if you're well educated, you should make the education available for the rest of us so that we can understand this complexity, so that you don't question us that we don't understand this. I mean, it's like double whammy on the people at the bottom there. If they don't understand, so they don't, because they're not educated, but they cannot get educated because Education is not available to everybody, and there is a layer, there is a class distinction in education in the Ivy League and the non-Ivy League. So the bottom layer is stuck in a way. Well, if that's the case, then this simplistic understanding and interpretation is how it will work, buddy. This is how it will work. We'll all have simplistic interpretations of things because we'll have to make some sense of the nonsense that goes on. We can only pose questions and think about them and then answer ourselves because nobody's answering them for us. All right, now, most important, thought experiment. Here's the thing. The fact that these basic things, which one, as I said, is mathematical, and the other one just makes fair and equitable that there is, as much regulation on the top as it is for the bottom people, which is us, is that if people will make these political and divide us, is it not beneficial that people start voting for one party one time and then just absolutely the other party the other time without regard to what their policies were, who the person is, what have they done or not, because of a simple thought, which is that it would keep them fighting for every vote, and which is the only power that you as a common person has. Because if you don't tell your ideology to anyone, they know nothing about you. They'll keep guessing, they'll have to make extra efforts to win that vote from you. They will not have the power that they have until and unless only when they know your preferences or your inclinations, that they divide you against the other you or somebody next to you. Well, if that's the case, by not disclosing the political vote, not through words, not through actions, not through likes, dislikes, comments, reposts, watching one set of videos and not watching the other set of videos, or one set of news channel and then not the other, and any such action which can prevent disclosing your ideology and your vote would be better off, because otherwise these algorithm pushed data sourcing avenues will keep guessing what you are, how many people are for or against, and this and that, and then they prepare you accordingly. In fact, they push more content to your liking. We all know this is happening. Books have been written around it, and you only get stuck in your confirmation bias and other biases. Well, this is just a thought experiment that the whole data industry can be run dry if people just stop contributing to the data points and in fact confuse them. Watch everything or watch nothing. If you watch everything, they don't know shit about you. If you watch nothing, they don't know shit about you. And one more hypothesis: if data is gold in today's date, is it not only making sense that you own gold, and you can own gold by not giving that data to somebody else? How about that as a thought experiment? Just don't give data to anybody else. I don't know. Something to think about. Something to think about in this country and the world in general, everywhere, because data is just gold, right? We've been told about this. Data is gold. Well, keep your data to yourself then. Then you own gold. They will have to pay you to get your gold. All right. Another thing is another thought experiment. Well, you won't let anybody change your thought. Then don't waste time changing anybody else's thought. Just keep swapping vote from one party to the other, regardless of who the hell is on the helm. It does not matter. Everybody is getting lobbied. Everybody has their interest. It only makes sense that you keep your interest above or prior to everybody else's, and that you can do by thinking for yourself, by thinking firstly, not just having opinions on the first go. I think it's about thinking. I mean, even from these, go to the actual document and think for yourself. Don't just buy shit from anyone. Just think for yourself. What does this document say? Underline the words, underline the statements, and then think about them. These press releases are the source of the actual information, not any outlet, not any other content or anything. It's just the actual source. They're easily available. They have to be available because they have to be publicly disclosed. Well, so long as they are publicly disclosed, thank God and thank the Constitution for that. We it's a game of connecting the dots. You read the document, then you read it. Syntopical reading, by the way, just Google that word, syntopical reading. Syntopical, I believe, yeah. So when you synergize topical reading and then read different things in same context and then connect the dots. Comparative reading, yep. Reading many things on the same subject and then comparing and contrasting ideas, vocabulary, arguments. Well, that's what we need. So as a thought experiment, try it out. Hope that helps you. Well, if you've really reached a point where our opinions matter to us the most, then make them really matter. I mean, Don't try and convince others otherwise. Don't, in fact, disclose your own ideology. That's the point we're going to come to. We're going to come soon to a point where giving ideas is going to be useless, boring, outdated, or giving opinions useless, boring, outdated. In fact, holding your opinions would become very pricey, very valuable. That's going to come soon. People are going to realize that data is gold, data is gold, data is gold. All right, data is gold. Then it makes sense to hold your data to yourself. Well, doesn't it? Hold your data. There you go. There's a motto: hold your data. Hold your data. Hold your gold. All right. Never mind. That's that. That's the wrap for today, guys. Let me know if anything. Otherwise, don't let me know anything. That's the whole thing. But do subscribe. Do subscribe, like, so that I can get access and have resources to create more content if at all you like it. Otherwise, yeah, save your time. Use it for better things. Please, please, please use it for better things. We all need it. We all need to develop filters because there's so much we waste our times on, then we end up not investing time on ourselves and developing ourselves. All right, I'll leave you with that. And next time, see you soon. Have a good one.